Hey guys, so the market dropped below 6,800. As you all know, everything we need to know is found in the charts. What's the next support level? How low can the market go? What are the other oscillators, indicators telling us as we see the markets continue to break down as well? If you want to know more about that, then you have to check this video out. Hi everyone, this is Marvin Germo, and if you're new to this channel, please subscribe and smash that bell so you become updated every time I come up with new videos about investing, about trading, with one goal in mind: to help you reach your goals of financial freedom. Because I really believe that the stock market, using technical analysis, is one of the greatest ways for you to be able to navigate the markets, to be able to be strategic in your entering and in your exiting particular positions as well. So what are you waiting for? Subscribe, smash the bell, and become part of this growing family. We're very close to 100,000 subscribers already, guys. So subscribe, hit the bell, and stay till the end of the video. So guys, I'm gonna share to you the charts right now, where it is headed. As you all know from the previous videos that I created, the PSEI is currently breaking down. The PSEI is currently breaking past a lot of support ranges. So where's the next support? Where is it headed? And how low can we possibly go? Are we in a full downtrend already? So at any point in this video, you will see I'll show you moving averages, I'll show you MACD, I'll show you also RSI if we're already oversold. Has people massively been selling? I'm also going to show you volume to see if there's a lot of people still getting out of this position. And let's look at the trend altogether. So if you're excited, here we go. Hey guys, so this is where the PSEI is in the grand scheme of things. As you all know, it got pummeled again because all of the markets also in different parts of the world were also massively down. That being said as well, the PSEI has been sold down. If I zoom in here, you will basically see that there was a from yesterday's closing, there was a gap already between here. It opened much lower than the closing price of yesterday. Then it closed at a much lower price as well. So please remember, this reiterates everything that we talked about, that the stock that's bearish, a stock that continues to break down, will continue to go down until something shifts, until it's proven otherwise. And if you notice it also right here, right now, RSI is telling us already that, hey, the market is already oversold. But here's the thing. Oversold also means that it got sold down at a very fast pace. Oversold means that there's a lot of sellers happening also. A lot of sellers means that it's bearish as well. So there's one thing that we do know right now: should there be any upward movement over the next few days, it's just a knee-jerk reaction because the market is pretty much oversold as well. So that happens when a stock is oversold, that happens when a market is oversold. But the general direction, the general trend is that the market is still pretty much bearish. The closest moving average that we have is at the 7278 level, meaning we're a great way off from a very strong reversal. We're very far. So if I will draw the next resistances that will block the market from going back up, this is where our resistances are pretty much are, and the strongest one still are around the 7,855 levels as well. So current resistances that you need to watch out for: 7277, 7517, 7667, 7855. Now, if I will zoom back to check where's the next support level, you will actually see this. As you notice from the previous videos that I said that there's a support level at the 6,800 level, predominantly because of this. This was a support that started around October to November 2018. We are now at February 2020, so you're looking at a more than a year. You're looking at a year and 4 months kind of support range that got broken just today. That being said, with the 6.8 support not holding, please remember this: if the market fails to go back from the 6,000 to the 6,838 level, then we can expect larger selling pressure still to develop as well. If it stays below 6,838 level, we can expect that selling will just continue to go back and just continue to proceed. If it goes above the 6838 level, then the current narrative will be for the markets to push back here. However, one additional thing that you could look at, if it goes back here, predominantly because it's oversold, plus it can have a shot to go here. and that's the only reason I can see right now. But that being said though, if it fails, if selling will abound, selling will continue, the next possible narrative is basically this. Look for where the next support level is, and if you try to hedge and pin it, you could put it somewhere around here at the 6,500 level. So that being said, if selling will abound, we could see the market hit 6.5 to as low as 6.2, and the lowest that we could see it is we could see the market go to the 6,000 level. So if I place the resistances here, 7.277, 7.517, 7.6, 7.7, 7.856, the next support levels that could probably catch the market should it fail to go back up the 6.8 level, we could see the market slide to 6.846, 6.238, and 6,083 as well. If I zoom out naman, I just wanted to give you this perspective also. I'll try to remove all of this. So I hope you got this portion also. I hope if everything's clear, comment clear, I'm understanding this. If not, please rewind the video again so you get a broader context. I'm going to show you the long-term perspective, also the long-term view. If you zoom out here, this is what you will see. This is the 2008 crash that we actually saw. If you notice it also, the very large dip here in RSI happened in May 2014. We're not yet there also from that perspective. If you notice it also, by the way, at this point in time now, I think our PE is around 14x, 14 times. That means that we are relatively cheap already. But please remember this, when the market is bearish, when people are selling down, sometimes it doesn't matter if it's cheap, because what's cheap could become cheaper still. That being said, if you notice and you try to count this as a trend, you will notice that this upward trend was already broken. If you try to look at this as a sideways market, you will see that the particular areas where I plotted a couple of minutes ago are now the prevailing support levels that will somehow some way try to protect the market from falling should it continue to fall back. But that being said, we haven't really gotten out of, we really haven't dropped to 6,000, or at least to 6,000 since 2016. So we're a great way off still from the 6,000 level. But by the way things are happening, we don't know how low it will go. And what we do know is that as long as sellers are in control, there's still a larger chance for the markets to relatively go lower as well. So you be strategic. Cash is still king. If it hits those support levels, that could be a chance for you to load up. If it breaks those levels, if you are trading very much, you can cut losses. But if you're investing, use your next tranche of cash to catch it at the next support level. I hope you got a lot from all of this. So I hope you guys got a lot from all of this, all of my sharings, all of these insights. As you all know, everything we need to know is found on what technical analysis is telling us. Technical analysis already tells us what the main, I guess, the broad understanding of what people think the market is. Because people can say a lot of things, but the price discounts everything. So if people are selling and the markets are going down, it tells you that people are still scared, people are still fearful, people are still going out. And the goal of all of this, if you are a position trader, is to wait until a reversal is happening. The goal for all of this, if you are a quick trader, is to wait for the stocks or the index to hit support levels, and then you start buying considerably if they are oversold already and sell at the resistance. And if you're an investor, again, go back to valuations. If the valuations are telling you that it's cheap already and the stock or the index that you're coming into is still growing, then come in. Again, if you're buying just the index, you're buying the PSEI, it's normal for the PSEI to go down. But here's the thing, the index always goes up, and it always goes massively higher than where it was before. Just to end, if you want to know more about stock market trading and investing, I'd like to invite you to all of my courses. The live training courses are this March in Manila, this April in London, this May in Singapore and Doha, Qatar, this June in Auckland, New Zealand, this July in Sydney, Australia, and in November we will have our sessions in Dubai and Tokyo as well. All of those details are in the description. You just have to click the links in the description below. Or for those who want to join, I have online classes as well. For those who want to learn the basics of the stock market, I have a Tagalog course with Chinkitan. It's called Stock Market for Everyone. Tagalog na version ng stock market investing. Very, very basic for those who want to learn the basics of it. The link is in the description below. And also, I have a business and investing course. These are for people who want to learn not just about investing, not just about the stock market, but also want to learn entrepreneurship. It's a collab between me and Sean C. It's called Make Money, Grow Money. The details are in the description below for those who want to join it. And for those who want to learn about the basics of the market, fundamental analysis, technical analysis, and generally where are you supposed to invest, I have books that I've written where you can order via Shopee. The links are also in the description. If you want to order some of them, they're all in the description below. And there, I just want to end. Please remember, ako naman, I've been investing for more than a decade already. Cycles like this happen. It's what you do when markets are down that define where you will be later on. It's either you cut to live out and fight another day, or if you're an investor, you ride the downward movements, but as long as you have cash where you can buy at strategic areas that will allow you that when markets reverse later on, that will be your upside as well. It will always go back to what your plan is and what your strategy is. You always fall back to what your technique will be, because it's your technique that will help you ride out where you're supposed to be later on. And I'm telling you this, don't be scared when things like this happen, because if you follow your emotions, that's when you will lose. If you follow your emotions, that's when you get susceptible to buying and selling not based on your strategy, or not based on technicals, not based on fundamentals, but when you buy and sell based on emotions, you will definitely lose. And I hope videos like this are helping you to be able to somehow win and navigate the markets with confidence. So this is Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.